Hello people, very good to all of you. So guys, today we are going to start with a brand new topic under the CA Foundation course, which is average due date. Guys, this is a very short and a sweet chapter. And from the examination point of view, in every examination, this question, from this chapter has come for minimum 5 marks. So if we look at all the attempts, right from May 18 to December 21, every attempt, constantly there is a 5-mark question that is being asked from this chapter. If you look at this May 2018 examination, your question number 2, this was asked for exclusively 5 marks. In November 18, it was asked in your question number 6, 6C was a ADD question for 5 marks. Then May 2019, this had come as an internal choice. So in May 2019, if you see third question, 3C, there was an internal choice between ADD and royalty accounting. Royalty accounting is deleted from your syllabus. You don't have to worry. ADD was asked for 5 marks. So from these two, any one you have to write. And if you look at November 19 examination, again 3C, they had a question for ADD and it was an internal choice between ADD and account current, which was again for 5 marks. November 2019, again 3B was an internal choice question between ADD and account current. In Jan 21 examination, ADD was again asked in 3C as an internal choice between ADD and sale of goods on return or accrual basis. We shortly called as SOGRA. And in July 21 attempt, guys, again ADD was asked in question number 6, 6C, as an independent question. And in December 21, again, ADD was asked in question 3B as an independent question. So every attempt you see, there's a question for 5 marks. It has not crossed 5 marks, but 5 marks. Right? Okay. So let's come back, guys. Before I theoretically explain what is an average due date, let me give you an example. Through an example, I can make you understand what is the concept of average due date. So let's suppose this is Mr. A. Mr. A is the seller. Mr. A is the seller, and this is Mr. B, who is the buyer or customer. So seller has sold goods worth 75,000 rupees. Seller has sold goods worth 75,000 rupees to Mr. B. Mr. B had requested Mr. A that he's running short of cash. He does not have sufficient money. So Mr. B requested Mr. A, can he grant him a credit period of 3 months, wherein he would make the payment in 3 installments. To which A agreed because A knew B for a very long time in the market. So he thought that it is okay in business to give credit since the person is genuine. Let's agree a credit period of 3 months. So the date of sale, guys, if you see the sale is happening today on 23rd June 2022. The sale is happening on 23rd June 2022. Right? So if you look at the credit period, this is the date of sale, which is on 23 June 2022. The first installment. So guys, B had requested for 3 installments. So 75,000, if I split it into 3 installments, can I say that each installment will come up to 25,000? So the first installment was due, date of installment. That is the first installment. First date of installment will be on 23 July 2022. Correct? The second installment, the second date of installment will be 23 August 2022. And the final installment, that is the third date of installment, is going to be 23 September 2022. So the first 25,000 will be paid here. Balance will be 50,000. The next 25,000 is paid here. The balance will be 25,000. The next installment is paid here. Balance is 0. Any doubts so far? Are you able to understand the outer line of the scenario? Easy. Online people, please confirm.
Yes, sir.
Yes, sir.
For this purpose, a contract has been executed between Mr. A and B. What is that contract? The contract for credit period, the contract for agreeing the installments that has been agreed. So you can say a bill of exchange has been executed, where all the terms and conditions in the bill of exchange as to on which date, what mode, what amount will be paid, everything has been agreed. And both the parties have agreed to it, whereas B has accepted and given it back to Mr. A, right? So the contract has been executed. Now, once the contract has been, created, can I say it is binding on both the parties? Which means what? Both the parties have to follow what has been put in the contract. Whatever the terms and conditions are agreed in the contract, both have to follow. Yes or no? For example, Mr. A cannot say that, give me all the payment, let's suppose here, 30th of June. Can Mr. A say that, no, you have to give me payment? He cannot say, because he's agreed for this thing. Now, can Mr. B say that, no, after this date, that is, I'll not make the payment on this date, I'll make the payment on the later date? Yeah, Mr. B, of course, he can say, but again, it will come with penal clauses, if any is been executed in the contract. So in short, what I'm trying to tell is that whatever is agreed in the contract between Mr. A and B, both have to strictly follow that. Is the scenario clear or not clear? Online students?
Yes, sir.
Yes.
Now what happens is, on 23rd of June 2022, the transaction of sale and purchase has been taken place. On 23 July 2022, Mr. B calls Mr. A and says that, sir, today is the first installment due date, right? So I'm actually supposed to pay 25,000 to you today. But Mr. B says that, sir, on the day when I was, buying the goods from you, I was running short of money. So that is why I was insisting you to grant me a credit period. But today, I have full 75,000 rupees, in my pocket, and I can make the payment to you if you want. Mr. A is a seller. The person is supposed to receive the money. Do you think that if Mr. B is offering, that, I'll make the full payment, will Mr. A say no for it? The person is receiving the money, will he ever say no for it? Not at all. He said that come today and pay the full 75,000 rupees. But Mr. B says that, wait. My dear friend, Mr. A, we have a contract between both of us where we've agreed that today on 23 July 2022, if I pay 25,000, you are okay with it. It is only I have come forward to put a proposal for that I have some extra money and I want to make the payment. So if you ask Mr. A, from Mr. A's point of view, that when the 75,000 is supposed to be paid. Now, okay, first of all, before that, why did Mr. B say that I want to make the full payment? Because Mr. B is having money, first point. Second point is, he doesn't want to put money in installments, because again, we have to remember now that this month on 23rd, I have to make the payment of 25,000, then balance 50,000. In that 25,000, I have to pay in next month. Like that, we have to remember. Then this fellow has to come 3 times to the shop to pay. So he feels that it is unnecessary headache, to remember, to go and make the payment. So Mr. B wanted to agree on a particular date where he can make the full 75,000 rupees as a payment. So that's when he asked Mr. A. So Mr. A seller, for him, it is very obvious that he want to receive the entire money on 23 July 2022. For the simple reason that the seller wants to receive the money at the earliest. The earliest, the better it is. Yes or no? Online people, do you agree with me? If you ask the seller, sir, on which date would you prefer to collect the entire 75,000 rupees? He would say obviously 23rd of July, because for him, the earlier the money comes, the better it is for him. So for seller, earlier, the better. Earlier, the better it is. Correct? Now, if the option is given to Mr. B, if Mr. A says that, okay, you tell me, when do you want to pay me the 75,000 rupees? What would Mr. B prefer as a date for payment? 23rd of September. Why? Because as a buyer, as the payer, I would always want to pay the money at the end. I want to delay the payment as much as possible. Yes or no? The person who is making the payment, if he is asked that on which date you would prefer to make the full payment, the person would say the later the better. How much ever later you're telling, that much it is better for him. So Mr. B would say that later the better it is. Yes or no? Tell me, guys, yes or no? Online people, I'm waiting for responses.
Yes, sir.
Yes, sir.
Now, guys, if you take the suggestion of Mr. A, Mr. A says that make the full payment of 75,000 rupees on 23rd of July. Here, A will get benefited. Why? Because had the 25,000 rupees alone come, he would not have got the remaining 50,000. Only if 25,000 money is paid on the first installment, remaining 50,000 A would not have got it. Now today, when on 23rd of July, when A is getting full 75,000 rupees, he is getting extra 50,000 rupees, which he otherwise agreed to receive it here. Mr. A said that the remaining 50,000, I'm okay if it comes to me later. But now, if Mr. A is telling to pay the entire 75,000 on first installment, don't you think that additional 50,000 rupees Mr. A is going to enjoy? From this period to this period, he's going to enjoy. From this period to this period, he's going to enjoy 25,000 for 2 months. And from this period to this period, he's going to enjoy 25,000 for 1 month. Correct? No? As per the agreement, if he goes, as per the agreement, if you strictly follow, A will get 25,000 here. A will get another 25,000 here. A will get another 25,000 here. But if entire 75,000 rupees is coming in one shot, this 25,000 coming here is already decided. But the remaining 25,000 is coming well in advance. So 125,000 is coming 1 month advance. Another 25,000 is coming 2 months advance. Correct? Now, when this 25,000 plus 25,000 is coming in advance, can I say Mr. A is got an opportunity to invest that money in the business and earn more money. So the 50,000 rupees, what Mr. A is additionally getting, he will invest the first 25,000 rupees for 1 month period, and he'll invest the remaining 25,000 for a period of 2 months and earn some interest out of it. Yes or no? Nobody will keep the money idle in the business. As a prudent businessman, you always want the money to be invested somewhere, either in the trading purpose or the non-trading purpose, and keep on earning money on money. Keep on earning money on money. That is the whole concept. So nobody will keep the money idle. So by that virtue, if on the 23 July 2022, if A is receiving entire 75,000 rupees, now A is got the opportunity of earning some extra money on that extra 50,000. And Mr. B will lose that extra earning on that extra money. Why? Because had Mr. B paid 25,000 here, another 25,000 here, and another 25,000 here, he would have enjoyed this money by investing somewhere. How? Now, I'm telling you that on 23rd July, B is having 75,000 rupees. Now, let's suppose he did not approach A. He did not tell A that I have money. So what he would have done? From that 75,000 rupees, he would have paid this 25,000 here, correct? Remaining 25,000, he would have invested for 1 month. And remaining 25,000, he would have invested for 2 months. Like that, B has got an opportunity to earn as well when he is not making the full payment on 23rd July. Correct? Now, since B has requested A that, I'm ready to make the early payment, and if B makes the early payment, B will lose the opportunity of earning the interest on this money, and he will lose the opportunity of earning interest on this money. Yes or no? And that opportunity A will receive it. Correct or not correct? So if the payment is happening on 23rd July, guys, can I say it is beneficial for Mr. A and it is non-beneficial for Mr. B? Yes or no? If you have any doubts, please ask me. If this point is not clear, then you will not understand the purpose of average due date. First, you need to understand what is the logic or significance or importance for calculating an average due date. Calculation of the sum is very easy, but I'm trying to explain you the significance. What is the purpose of calculating an average due date? So here, are you able to understand that on 23rd of July 2022, if A is receiving entire 75,000 rupees, A is at the advantageous position, because out of the 75,000, 25,000 anyways he was getting it as per the contract, but he's getting extra 50,000, and this extra 50,000 rupees he will invest somewhere and earn more money, and that B will lose that opportunity of earning that extra income on that 50,000 rupees. So do you think that Mr. B will agree to make the full payment to Mr. A on 23rd July? Do you think B will agree? No. B will say that no, boss, I will not agree. Because if I do that, you will earn more money. I will be at the losing end. So 23 July, not accepted. 23 July, not accepted. Who's saying this? B is saying that 23 July, we will not agree for the payment. Then Mr. A is telling, okay, then you tell me which date you want me to pay. Mr. B says that I will pay the entire 75,000 rupees on 23rd of September. Do you think A will agree for that? A will again put the point that as per the contract, you said me you'll pay 25,000 here. Then you'll pay this 25,000 here, then this 25,000 here, which means I have the opportunity of investing this 25,000 for a period of 2 months. That is from this period to this period. A is telling that had you given me this 25,000 here, I would have invested this money for a period of 2 months. 2 months. I will earn interest for 2 months. When you pay this 25,000 rupees on this 23 August, I would have earned interest on this 25,000 for a period of 1 month. Now, if you pay the entire 75,000 here, then I'm getting the money here. Therefore, the opportunity of earning this interest is gone and this interest is gone. Is Mr. A right? And Mr. A is telling that if you make the full 75,000 payment here, I will lose the opportunity of earning this and you will gain the opportunity of earning this. How? Because as per the contract, you were supposed to pay this 25,000 here. Now you are not making the payment. Then what will you do? You will invest in somewhere, some other place and earn money. So now you will earn that interest. So Mr. A will say that no, I will also not agree on this thing. Because as per B, if B is asking A to make the payment after 23 September, that is on 23 September for 75,000 rupees, B is winning here and A is losing here. Winning and losing what? Interest on the investment part. Are you able to follow? So now guys, average due date is a concept where you will come in between, somewhere in center, and agree a date, such a date where neither A is losing nor B is losing. Neither A is alone gaining nor B is alone gaining. If at all gaining, both are gaining. If at all losing, both are losing. So average due date is that due date, is calculation of that due date, where when you make the payment, neither of the parties are losing any interest. So identifying that center date where both the parties are not losing the interest, that date is called as average due date. Here guys, the average due date here in this question will be 23 August. Why? Because the interval between two consecutive payment is same 1 month and 1 month. Both the period is same here. It is equal installment. So the center point is 23 August. So if you make the payment, full 75,000 rupees payment here, both of them will gain equally. Nobody will lose anything. Are you able to follow? Now, in all the practical questions, this does not happen. The various installment dates, the payment date happens on different dates. Some will make payment on 23rd of July. Some will make payment on 20th of August. Some will make payment on the 5th of September. When the dates are changing, in that case, the middle date cannot be the average due date. So you need to calculate. So for that, a formula has been given. So are you able to follow? So what is average due date? When payment or receipt from a particular person are due at different date. When payment or receipt from means what? From B. From particular person means what? From B. Is due on different date, correct? No? The first due is on 23rd of July. Second due is on 23rd of August. Third, it is due on 23rd of September. So it is due on different date. When payment or receipt from a particular person are due at different date, an average due date is being calculated or determined in order to simplify the payment process. So when you calculate the average due date, for payment, that date, the entire lump sum money is paid in one shot instead of paying in different installment, in such a way that neither of the parties are losing any interest. When a person owes several amount to another person, when person owes, in this case B is owing several amount. What is several amount? 25,000, 25,000, 25,000. This is 3 amount. Several means multiple amount. To another person A, falling due on different dates, and he wishes to make the payment. And he means what? B wishes to make the payment on just one particular date. He wants to make the entire 75,000 payment in one particular date because he wants to be free from the hassle. Hassle of what? Hassle of remembering that on so and so date I have to pay. Hassle of going and making the payment. Traveling time, everything is going for a waste. So he wants to protect everything. He wants to save all that. So for that, he wants to agree on a date where he is willing to make the full payment in one shot. When a person owes several amount to another person, falling due on different dates, and he wishes to make the payment on just one particular date, so that neither the payer B nor the payee A stands to lose or gain by way of interest. Neither A should lose nor B should lose. Neither A should gain nor B should gain by way of interest. Such date is known as average due date. Such date is known as average due date. Average due date is that date where multiple payments are settled in lump sum. Multiple payment of 25,000 each are settled in lump sum of 75,000 on a single date without loss of interest to either of the party. More simplified language. Are able to follow? This is the average due date. On this date, so in our example, guys, the average due date will fall. If you calculate, the average due date will fall on 23rd of August 2022. On this date, if you make the payment, neither A is losing any interest nor B is losing any interest. Neither A is gaining over and above B nor B is gaining over and above A. Are you able to follow? This is called as average due date. Online people, please tell me if you're clear or not clear with this.
Clear, sir.
Clear, sir.
Everybody.
Clear, sir.
Clear, sir.
So in this particular chapter, guys, you're going to learn 4 different cases. So today we'll be learning first case, where we'll learn how to calculate the average due date, where only one party is involved. One party involved for what? One party is involved for paying, another party is receiving. So one paying, another receiving. We learn in that scenario, how do we do the calculation of the average due date? So let's take an example for that, guys. So first question, chapter number 6, guys, accounting for special transaction. This is the compiler. This is a special compiler where I've compiled all the questions from your ICA study materials, that is illustration as well as exercise questions, past examination questions, MTP questions, and RTP questions. So the first question is, guys, from your ICA study material. You can see it here. This first question has been incorporated here. The following are the amounts due on different dates. The following are the amount due on different dates in between the same parties. In between the same party. Okay. So 500 rupees, guys. Let's suppose this is Mr. B. B has agreed to pay Mr. A 500 rupees on 3rd of July, 800 rupees on 2nd of August, and 1000 rupees on 11th of September. This has been agreed. Suggest a date on which all the bills, because these are bills payable or bills receivable, suggest a date on which all the bills may be paid without any loss of interest to either party. Suggest a date on which all the bill is paid on a particular date without loss of interest to the either party. So you have to calculate that date. So how do we do that? So guys, if you look at the question very carefully, amount column is given and due date is given and bill is given. Can you do some correlation between this? This chapter has got some references or inferences from the bills of exchange topic. So if you are clear with bills of exchange, then this concept will be easy to understand. I'm not telling that we'll be discussing the entire bills of exchange concept here. No. Here from bills of exchange, what concept is being linked is the calculation of the due date or the maturity date. That is the reason we did the bills of exchange first, and immediately after this, we're doing this average due date. Are you able to follow? So guys, it is due date. So how do we get a due date? See, technically speaking, when we did bills of exchange, what did we learn? That whatever is the transaction date, with the transaction date, if you add the term period, that is 3 months, 2 months, 1 month, 30 days, 60 days, 90 days, you get due date. With this, if you add 3 grace days, because the Negotiable Instrument Act says that you need to always add 3 grace days for the negotiable instrument, which is bills of exchange. So when you do that, the date what you get is maturity date. But if you remember, in all the practical questions that we have seen in bills of exchange, wherever they ask the due date, they've added the 3 grace days only calculated. So in the practical questions, as per them, the due date and the maturity date has been same. Theoretically, it has been different. If you also read the theory of your ICA study material, theoretically, due date is different from maturity date. But in all practical questions, they are treated both same. Are you able to follow? So now, guys, they have given the due date here. They've given the due date. This is not the transaction date. This is the date on which the payment is agreed to be paid. Are you able to follow? This is not the transaction date. This is the date on which the payment is agreed for payment. The money has been agreed for payment. Now, how do we do that, guys? How do we do that? Heading will be calculation of average due date. This will be a heading. Leave 2-line space and then please put this format. Due date amount, number of days from base date. What is base date? I'll explain. Product. Now, please note down the due dates, guys. The first date is 3rd July, 2nd August. 3rd July, 2nd August, 11th September. 11th September. The amount is 500, 800 and 1000 rupees. 500, 800, 1000, 1000 rupees. 1000 rupees. If you see the total is 2300. Now, we need to calculate the number of days. From the base date. Now, how do we select a base date? In the due date column, guys, or from the due date column, you can pick and choose any date as a base date. So if you choose this as a base date, so from this base date to the due date, how many days is there you have to calculate? From this base date of 3rd July to 2nd of August, how many days you have to calculate? From 3rd of July to 11th September, how many days you have to calculate? So you can choose any day here from the due date as a base date. But for all the practical question, we'll always choose the first due date as a base date. Why? Because if you choose the middle one, the previous one days will be negative and the subsequent ones will be in positive. So you will have both negative and positive calculation. To avoid negative calculation, we would always consider the first date of the due date as a base date. So we're going to take 3rd July as a base date. So please write it in the top, 3rd July. We need to calculate the number of days from the base date. So the formula is base date to due date. Base date to due date. Base date minus due date. So the first case, guys, what is my base date? 3rd of July. And what is my due date? 3rd of July. Base date to due date. Base date is 3rd of July and the first due date is 3rd of July. 3rd of July to 3rd of July, can I say number of days is 0? Amount into number of days is equal to product. So 500 into 0, can I say it is equal to 0? No doubts. Now calculate number of days from the base date. Base date is 3rd July. From the base date to 2nd of August. That is from 3rd July to 2nd August. This is the base date. This is the due date. So from 3rd July to 2nd August, how many days are there? So in July totally, guys, in July if I see totally, can I say 31 days are there? In that, the base date starts from 3rd of July. So can I say 3rd of July is coming here? So prior to this, we want to omit this. We want to ignore this part. So from 31, if I minus this part, can I still get this part? So from 31 July, that is 31 days of July, from 31 days of July minus 3. So take your calculator, guys. 31 total days in July minus 3 days. So which means 28 days of July. Plus August, how many days? 2 days. So how many days totally? 30 days. Number of days from base date to the due date. So from 3rd of July to 2nd of August, totally how many days are there? 30 days. 30 days. Again, guys, now number of days from base date to the next due date. What is the next due date? 11th September. 11th September. So from 3rd July to 11th September, in between, how many days are there? Take a calculator. So in July, 3 days gone. So 31 minus 3, if I do, I'll get 28 days of July. 28 days of July. August, how many days? 31 days. How many days of September? Because till 11th I have to calculate. So 1 to 11th is 11 days. So 28 plus 31 plus 11 is how much? 28 plus 31 plus 11. 70 days. So 1000 into 70. So please tell me the product, guys. You can calculate the product. How? 500 into 0 is 0. Then take your calculator. 800 into 30. M plus 24,000. 1000 into 70. M plus 70,000. And do MRC. You will get 94,000. A lot of people, what they do in calculator? 800 into 30 equal to 24,000. Then they'll erase the entire thing. Then again, what they'll do? 1000 into 70, 70,000. They'll erase the entire thing. And then they'll again manually do 24,000 plus 70,000 is equal to 94,000. This is total waste of time. This is the smartest way of using the calculator. The memory function that has been inbuilt. You don't have to sit and again retype. So whatever calculation you're doing, if you put memory plus, it will go and get added to the memory of the calculator. And whatever subsequently addition and subtraction you're doing, automatically the memory will be adding and subtracting and give you the final net answer. Are you able to follow? This you have already learned in the Bills of Exchange chapter. So 94,000 rupees is, guys, 94,000 rupees is the total product. Now, what is the formula to calculate? What is the formula to calculate the average due date? Average due date is equal to base date plus total product divided by total amount. Total product divided by total of the amount. Average due date is the weighted average. Average due date is the weighted average of the due dates of the various transactions, where the amount of each transaction is used as a weight. So you've used amount as a weight and you multiply it with the base days, so to get a total product. This concept is similar to what you have learned in the partnership chapter in your 12th standard. In your partnership, fundamentals of partnership, we learned the concept of calculating the interest on partners drawing. So for that, we had simple method, product method, and average period method. So similar to that, this is a product method where the amount is multiplied with the base days and you get a product. So you're using the amount, as a product weighted product. So to derive a figure in such a way that you can get an average due date. So the formula for to calculate the average due date is base date plus total of the product divided by total of amount. Whereas what is base date? It is a due date of the first transaction. Can I say this is the first transaction's due date? 3rd July is the first transaction, and the first transaction due date is 3rd July. Transaction date is something else. This is the due date. This is coming after adding the term period and 3 grace days to the transaction date. So base date is the due date of the first transaction. The due date of any transaction. Preferably, you can take any due date of any transaction, but we'll prefer the due date of the first transaction. You can take any due date as a base, but you'll take always the first transaction's due date as a base in order to avoid the negative calculations, minus calculations. Is that okay? So base date is agreed, guys, 3 July. So 3rd July is the base date. Total product is 94,000 divided by 2,300. So 3rd July plus how much it is? 94,000 divided by 2,300. 40.86. 40.86. Guys, in average due date concept, the result of the fraction should be rounded up to 1 rupee. So this is called as round up. How many of you know what is round off, round up, and round down? Round off is one concept. Round up is another concept. And round down is another concept. What is the meaning of round off? If it is 40.01, if you're getting the answer 40.01 up to 40.49, then you will take 40. You will take the 40 as the date, or you will take 40 as the number. It is called round off. If it is 40.50 to 40.99, then you will take 41. So the cutoff is 0.4 or 0.49 is the cutoff. So up to that, you will take the previous value, which is 40. Immediately before the fraction, what are the values coming? It is that value will take it. If it is 40.5 and above, 40.5 and above, it will be the next number 41. This is called as round off. What is round up? From 40.01 up to 40.99, it is round up. So it will be 41. Because whatever be the fraction, the aim is to round up to the next value. Round down means what? 40.01 to 40.99. 40.99. The answer is going to be 40 because they want to round down. Even if it is 40.99, it has to be round down only to 40. This is the difference between. So in the entire average due date chapter, they are always going to do the round up. Of course, I will say that somewhere here and there in few of the past exam papers or MTP and RTP, few places, they have done round off. But we'll follow uniformly one rule. Because in certain places they have done round up, certain places you have done round off. So you can put an assumption in your examination paper that we have round up the figure. You can state the assumptions and do the calculations. So here guys, we're going to do the round up. So what is the round up of 40.86? It is 41. So 41 days. Total product divided by amount. Whatever you get, that is number of days. It is number of days. The result of this is number of days. Okay. So this is 41 days. It is 41 days. Any problem here? So with 3rd July, you have to add 41 days, guys. You will come to that center point. You will come to that center point where neither of the parties are losing any interest or gaining any interest. You will come to that date. So with 3rd of July, guys, you need to add 41 days. So how do we do that? This is the tricky part, which people, miserably make a lot of calculations, mistake. So guys, total 41 days. Today we are at 3rd of July. So on 3rd of July, we are not making the payment. We want to make the payment from 3rd July after adding 41 days. Whatever day is coming, on that we have to make the payment. So in July month, guys, can I say out of 31 days, 3 days are gone? So balance is how much? 20. So from 41 days minus 28 days of July. How did you get 28 days of July? 31 days are there in July. In that 3 days is gone, boss. 3rd July is the due date, which means what? The due date starts from, the payment date starts from 3rd July. So 1, 2 and 3 is useless. So from 31, if you minus 3, you'll get balance 28 days of July. So total 41 days, we have to travel forward. We have to go 41 days forward. In that, the first 28 days are of July. From 3rd of July, start walking 41 days. So what is the 41st day? That we are calculating. So from 41, 28 days of July, I have completed walking. So I have how many days remaining? 13. Sorry? 13. 13 days of August. So 13th day of August will be the due date. Are you able to follow? So for 3rd July plus 41 days, if you calculate, you will get 13th of August. 13th of August is that date, the center point where the payment is happening in such a way that neither of the parties are losing or gaining by way of interest. This is the period, guys. This is the period. Can you tell me what is the first due date? 3rd of July. What is the second due date? 2nd August. and last date is 11th September. So can I say the gap is little haphazard? So when you do this average due date, guys, you will exactly come at the center point of this line. You'll come into the center point of this line, where upon making the payment on this date, neither of the parties are gaining anything or neither of the parties are losing anything. It is a win-win situation for both buyer and seller. It is an unbiased approach. So 13th of August is, guys, the average due date. The average due date. Any problem here? Any problem here? Hello? Online people are waiting for responses.
Clear, sir.
Clear, sir.
13th of August, guys. 13th of August is the average due date. That is a requirement of this question. Do not concentrate on this. We'll do a similar kind of a thing as a part of the question. As a part of the requirement of the question, we'll do it. So this you forget it. Here in the question, they've only asked to calculate the average due date. Can we do a second question? Online people, are you all comfortable with the first one?
Yes, sir.
Yes, sir.
Okay. The second question, guys, before I go to the second question, there's something that I need to, just do a quick recap from your bills of exchange topic. In bills of exchange, guys, while calculating the due date or while calculating the maturity date, while calculating the due date or the maturity date, we had, discussed something. What will happen if it is a public holiday? What will happen if this is a sudden holiday? Do you remember? So we have to just do a quick recap of that, and then I'll go to the next question. Now, guys, how do you calculate your maturity date? That is the transaction date. For all practical purpose, your maturity date and the due date is going to be the same. Right? So how do you calculate your due date or maturity date? With the transaction days, you'll add the term period, which is 3 month, 2 month, 1 month, 30 days, 60 days, 90 days. With this, you will add 3 grace days to get the maturity date. And if that maturity date falls on a public holiday means what? Sunday. All the Sundays are public holiday. Correct, no? This is by law, Sunday is a public holiday. Apart from that, government in their official gazette is basically a government document where they would want to announce something. If government wants to announce something or declare something, it has been routed or it has been presented through an official gazette. Gazette is a public, that is government document for the public. It is a government document as an information to public. So in the official government gazette, the central government may say that these dates in this particular calendar year is to be treated as a public holiday. They will say that, okay, your January 26 is a Republic Day, public holiday. 15th of August, public holiday. October 2, public holiday. Like that, they'll give you a complete list. For every calendar year, this has been announced. So if your maturity date or the due date happens to fall on a public holiday is a day on which neither banks are working, not the buyer is working, not the seller is working. They're not supposed to work. That is what is public holiday. You're not supposed to do any business transactions. So on that date, is it possible for the buyer to make the payment to the seller? Is it possible for the customer to make the payment to the seller? Tell me, yes or no? Not possible. In that case, what will be the due date or the maturity date? They say that, first thing, do you know well in advance when the public holidays were going to happen? Obviously, you know, because if it is a Sunday, you know that Sunday is a holiday. Second, in the official gazette, it has been listed that which all day is going to be public holiday. So which means you are very well aware that which are all the days on which the holiday is going to happen. When you know that in advance, you have to plan things in advance. How? The previous day of the due date will be your final due date. For example, the final due date is happening on, let's suppose, 15th of August, Monday. Or let's suppose this is Friday. 15th of August, Friday is the due date. On 15th of August, can I say Friday? It is a public holiday because of Independence Day. Correct? So on the Independence Day, you're not supposed to do any transaction. So your due date is not going to be 15th August. It is going to be the previous day, the preceding business day, which is 14th August. So if your maturity date or the due date falls on a public holiday, then you will take the preceding business day as the maturity date or the due date for making the payment. Because you very well know in advance that what day is your public holiday, and when you can make the payment, you can very well plan in advance. Yes or no? Now, let's suppose if the preceding day is also public holiday, how? Let's suppose 15th August is Monday. 15th August is Monday. So 15th August is Independence Day, public holiday. So you'll tell previous day. Previous day is what? 14th August, which is Sunday. So can you do Sunday transaction? No. Then if the preceding day also is a public holiday, then the day preceding to the previous day, the day preceding to the previous day, preceding this date is Saturday. The before date of the latest due date will be the next due date, which is 13th of August. Okay, not okay? Hello? Online people, please confirm. Okay, not okay?
Okay, sir.
Okay, sir.
If it is a public holiday, if the due date is a public holiday, then the latest new due date, the new due date will be the preceding business day. If the new due date is also a public holiday, the new due date will be the preceding to preceding working day. Now, sometimes it so happens that we have emergency or unforeseen holiday, which means what? This was never planned. It just happened. Let's suppose some riot broke out in some parts of our country. So they declare it is a bandh. Right? So will government give a notification, official gazette that, on this particular day after 5 months, we'll have a bandh? Have you ever heard? No, bandh is emergency, unforeseen. It was never predicted. It just happened. So in that case, what is the due date? So for example, the due date was, let's suppose, 16th of August. Okay. Suddenly that day, they announced as bandh. Or just 1 day or 2 days before that, they announced as bandh. In that case, you cannot plan for the previous day, boss. Because emergency unforeseen holiday, just immediately it has been announced. For example, when COVID pandemic was announced, they gave us 1 or 2 days gap to do all the work. So it is not possible to, immediately make the planning in advance and do the previous payment. So in case of emergency or unforeseen holiday, the due date will be the next following working day. Next following working day. So in our example, instead of 16th August, it is going to be 17th of August. In that case, it is going to be 17th of August. Any problem here, please? Online students, any problem here, please? The next following working day will be a due date.
Sir,
Yes, Shrikant.
sir, அப்போ 16th to 19th வரைக்கும் பந்துனா 28th will be the due date, sir.
So Shrikant is asking, sir, from 16th till 19th, if it is a holiday, then the next working day will be what? 20th of August, Shrikant?
Yes, sir.
20th. So next following day, in fact, you can say working day.
Okay.
It has to be a working day, boss. If it is a non-working day, how will you make the payment? So it has to be next following working day.
Okay, sir.
Online people, all of you clear with this point?
Clear, sir.
Can I go forward? So second question, guys, it says that the following amounts are due 2x by y. It is due 2x by y. So who should make payment to whom? Who will make payment to whom? Y has to make payment to x, correct? Y wants to pay off on 18th March and 14th July. Now, first we have to calculate an average due date. That date, if the payment is happening, on that date, if the payment is happening, neither x is gaining anything nor y is gaining anything. Neither x is losing anything nor y is losing anything. Apart from the due date, if you are making any other payment, sorry, if you are making payment on any other date, then somebody will gain, somebody will lose it. So gaining and losing is nothing but interest. So they are asking us to calculate the interest for that. So first we have to calculate the average due date. The following amount are due to x by y. So 500 is due on 10th of January. 1000 is due for payment on 26th of January. 3000 is due for payment on 23rd of March. and 4,000 is due for payment on 18th of August, which is Sunday. And please pay attention to this details also. Okay, and if you look at, this is the due date. Determine the amount to be paid in A and B. That is, in case if the payment is happening on 18th of March, what will be the amount to be paid? Amount means what? This bill value, that is the bill value plus or minus interest will be the amount. Y plus Y minus I'll discuss when I do this part. Okay. So first modest calculation of the average due date. So for me to calculate the average due date, guys, what is the format? Yes. So calculation heading is very important. Presentation is very important. So this is the second question. So number 2, calculation of average due date. Here in this question, have they given you the transaction date or due date? If you observe very carefully, they've given the due dates. It's not transaction date. Look at the word due date. So due date. Then amount in rupees. Then what? Number of days from base date. So that we have to find out what it is. And then product. Wait. I'll come to that. I'll come to that. I know what you're going to ask. Now, guys, 10th of January is the due date. Is 10th of January public holiday? So can I say that date we can confirm as due date, final due date? So first is 10th of Jan, final due date. If I come to the next due date, 26th of January, guys, it is a Republic Day. So can I say public holiday? This is the original due date. But now that you know that if the original due date falls on a public holiday, the preceding date will be the final due date. So here in this case, can I say 25th of January is your preceding date, the final due date? Have anywhere in the question that mentioned in the additional information or somewhere the 25th January is a Sunday? No. In that case means, can I say 25th of January is the working day? So 25th Jan is going to be your 25th Jan is going to be your revised maturity or due date. 23rd March. Anywhere in the question have they given that 23rd March is a Sunday or a public holiday? No. So can I say that is the final due date? Online people are not getting any responses. So what do I assume? You're listening or not listening?
Listening, sir.
Now, next is, guys, 18th August. The question is very explicitly said that it is Sunday. So if 18th of August is Sunday, can I say Sunday is a public holiday? Being a public holiday, can you make the payment or receive the payment on 18th of August? Not possible. Not possible. So in that case, what will be the revised due date? The previous day. The previous day is 17th of August. So 17th of August is going to be my revised due date. Any problem here, please? Any problem here, please? Abhi, Bhumika, Kavi, Kavya, Rishabh, Rupesh, Sanjay, Shrikant. Are you clear with what I'm explaining?
Yes, sir. Yes, sir.
Yes, sir.
Okay. Can you quickly tell me the amounts, please?
500, 1,000,
1,000,
3,000,
3,000,
4,000, sir.
4,000. Wonderful. I need to calculate the number of days from the base date. I told you that how do you calculate or choose the base date? From the due date, you can take any date as a base date. But we'll always prefer the first due date as the base date so that we can avoid the negative calculations. Are you able to follow? So 10th Jan is the base date, guys. So 10th Jan is the base date. So this is the base date. That is 10th of Jan. Base date is equal to 10th of Jan. So from 10th of Jan to 10th of Jan, can I say number of days is 0? Now 10th of Jan to 25th of Jan. 10th of Jan to 25th of Jan. How many days? So the question that people ask me here is, sir, should we consider 10 or not consider? You're not supposed to consider the base date. The next day of the base date onwards, you have to calculate. So in your calculator, what will you do? Take and put 25 minus 10. You'll get 15. 25 minus 10 means what? You're minusing 10 days of January. So which means 10th day of the January also you're eliminating. So you have taken into consideration the 11th day onwards. So first day, 10th January, you have to ignore. So 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. So when you calculate from and to, the from date should be ignored. To date should be considered. Okay. So 25th of Jan, clear with this? Okay. Now guys, from base date to 23rd of March. So from 10th Jan, you have to travel till 23rd of March. How many days? Very simple.
100 days, sir.
In Jan, how many days are there totally? In Jan, totally how many days are there?
31.
So 31 days of Jan. In that 31 days, eliminate 10 days of base date. So 31 minus 10. So 21 days of Jan. 21 days of Jan. Then after Jan, next is what? Feb. How many days in Feb? 28 days of Feb. And then after Feb, it is March. 23 days, because we want till 23. No, our stoppage point is 23rd of March. So 23 days of March. So total how much? Which means I started my journey on 10th of Jan. So in the entire Jan month, I traveled for 21 days till the month end. Then February, I traveled for 28 days. And then March, I traveled for 23 days. So how many days totally I traveled? 21 plus 28 plus 23. 72 days of total. Jan, Feb and March we traveled. Then now guys, from the 10th Jan base date to 17th August. So now you're starting your journey from 10th of Jan till 17th August. How many days guys? Very simple. 21 days of Jan, 28 days of February, 31 days of March. Jan, Feb, March, April, 30 days. May, 31 days. June, 30 days. July, 31 days. August, 17 days. 17 days of August. So 21 plus 28 plus 31 plus 30 plus 31 plus 30 plus 31 plus 17. How much guys? 219 days you have been traveling. 219 days totally. Any problem here? Any problem here? Anybody is finding difficulty in calculating the number of days from base date? Comfortable? Offline people comfortable. Online people?
Comfortable, sir.
Comfortable, sir.
Okay. Now we have to do the product, guys. Nothing but amount into the number of days will give me the product. So 500 to 0 is 0. Now take your calculator, guys. 1000 into 15 m plus will give you 15,000. Then don't do anything. Press 3000 into 72 m plus, which is 2,16,000. Then 4,000 into 219 m plus 8,76,000. Then what will you press? MRC 11,07,000. 11,07,000. 11,07,000. What is the total of the amount? 500 plus 1,000 plus 3,000 plus 4,000. So total is 8,500. Total is 8,500. Till this all comfortable? Till this everyone comfortable?
Yes, sir.
Yes, sir.
Now guys, I'm erasing this part. Now we need to calculate the average due date. What is the formula for average due date? Sir, base date plus or minus. Now when will minus come? Guys, had you taken the base date somewhere in between, you would have got answer in negative. So in that point of time, you have to put minus. So in our case, since we have taken the starting point, there is no way that you'll get answer in minus. So base date plus total product divided by total amount. Guys, no talking among yourself, please. What is the base date that you've taken? 10th of Jan is the base date. Plus, what is the total product? 11,07,000 divided by 8,500. So what are you getting, guys? Answer. 11,07,000 divided by 8,500. What are you getting? You're getting 130.25. So we have to round up. So it will be 131 days plus 131 days plus 131 days. So now, guys, from 10 Jan, if you add 131 days, you will get a particular date. That is called as average due date. Now, how do we do that, guys? How do we do that? So 131 days have to go forward. So we are on which date at the moment? On which date we are today? We are on 10th of Jan. So in Jan, how many more days we can travel? 31 days in total Jan. If I minus 10 days of Jan, I will get 21 days. I can travel 21 days of Jan. So from 131 minus 21 days of Jan. How did I get 21? 31 minus 10. Right? Balance is how much? 110. Then after Jan, the next month will be Feb. So minus 28 days of Feb. After Feb, it will be March. March, how many days? 31 days. So minus 31 days of March. Then after March, it is April. How many days? 30 days. So first, before that, let's see the total if there is any balance date available or not. 110 minus 28 minus 31 is 52. So 52 days total I have to more travel. So after March, I'll be traveling full of April. So 30 days of April full I'll travel. 51 days? Okay. It is not 52, it is 51. So 51 days more I have to travel. So in that entire April I'll travel. So in 30 days of April if I travel, what is the balance days? 21 days of May. So I need to stop my journey on 21st day of May. It is simple. So 10th Jan plus 131 days is 21 May 2000, whatever date, or we can put 21st May also. We can write 21st May. So on this date, if the payment is happening, guys, neither X is losing anything nor Y is losing anything. Is it X and Y? Yeah. Neither X is losing anything nor Y is losing anything. Neither X is gaining anything nor Y is gaining anything. This is the break-even point. No profit, no loss. But on this date, is the payment happening? Is the payment happening on this date? No. The payment is happening on 2 different dates. I mean, 2 different options has been given. The first option, they are saying that they're making the payment on 18th of March. So case A, if the payment is made, on 18th of March, it amounts to, from Y's point of view, guys, from Y's point of view, Y is the person who is making the payment. From Y's point of view, is he making the early payment or is he making the late payment? He is supposed to make payment on 21st of May, but he's making payment on 18th March itself. So can I say it is early payment? If the payment is made on 18th March, it amounts to early payment. Therefore, Y is supposed to receive rebate or a cash discount for early payment. We can say a rebate or discount or interest for early payment. Does it sound good? Yes, you are asked to make the payment on 21st of May. This is the average due date. What is the actual payment date? 18th of March. So please tell me, guys, how many days in advance the payment has happened? How many days in advance the payment has happened? So 18th March, say 21st of May, guys. So in March, how many days are there? So let's suppose this is March, April, and May. This is March. So in March, totally how many days are there? 31 days minus 18. So how many days of May? Sorry, March, 31 minus 18. So 13 days of March. So you're making 13 days of March early payment. April, 30 days. May, 21 days. So 13 plus 30 plus 21. How much? 13 plus 30 plus 21. You're making 64 days advance payment. You're making the payment in advance by how many days? 64 days. So calculation of interest bar rebate bar discount. So interest is equal to, what is the total amount for payment? What is the total amount? 8,500. And what is the interest rate, guys, given in the question? 8%. So 8,500 into 8 by 100 into 64 divided by 365 days. Guys, in a year, normally it is 365 days. If the question says that it is a leap year, in that case, you will take it as 366 days. So guys, 8,500 into 8 by 100 into 64 divided by 365, because the 64 is not in months, it is in days. So I have to take the base also in year, full days. So what is the answer, guys? 8,500 into 8% into 64 divided by 365. 119, guys. 119.23. Is this the answer? Is this the answer? Online people, I'm waiting for your responses.
Yes,
Tell me,
sir.
guys. Yes or no?
Yes, sir.
Yes, sir.
Sir.
Now, what is the requirement of the question? Determine the amount to be paid. So now, guys, therefore, you can round this off. So now this is round off or round up? This will be always round off. What have you done here? Let's see. The answer is different.
So that's what we are taking the average date as
63. 13 plus 30 plus 20. What did we do?
no, so they took the average date.
Average student, what did we take? 20th of
131 days into 130.
1 second. Yeah, so this is what I was talking about. So here what they have done is they have done round off. Correct, no? So 11 lakh 7,000 divided by 8,500. You're getting 130 days. So we got 130.25. So in this question, what they've done is they've done round off. So this is what I was telling. In certain places they have done round off, certain places they have done round up. So we'll always, in majority of the places they have done round up only. So we'll follow round up. We'll follow round up. For this, there is no round off, guys. As it is, you'll minus. You'll take as it is into consideration. 119.23. So now, guys, therefore, the amount to be paid by Y to X is how much, you know, guys. Now, amount that Y has to pay to X, the original amount is 8,500, correct? Now, guys, since Y is making early payment, so this 119.23 is, can I say, a reward for early payment? It is as good as a cash discount. I told you, this is as good as a cash discount. What is a cash discount? We have learned in the journal entry chapter of 11th standard. Cash discount is a discount given for someone who had made an early payment, right? So who is going to give this money to whom? This 119.23, who is going to pay whom? X is going to pay to Y. So X to Y, 119.23. So Y has to pay to X 8,500. So I will pay, that is Y is paying to X 8,500 and receiving 119.23. So we are receiving from X 119.23. So instead of having two separate transactions, can we do a net off? For example, you have to pay me 100 rupees. You have to pay me 100 rupees. I have to pay you 20 rupees. So one option is that I take 100 from you and I give you 20. Another option, what you do is the 100 what you're supposed to pay me, in that you minus the 20 what I have to pay you. You minus and give the balance to me. So 8,500, Y has to pay to X. So Y is telling that, look, Mr. X, I have to pay you 8,500 and you have to pay me 119.23. So from this amount, what I'm supposed to pay you, I'll minus the amount what you are supposed to pay me. This money, what you're supposed to pay, I'll minus it from the value and give the balance to you. So 8,500 minus 119.23 is how much? 8,500 minus 119.23. You'll get 8380.77. This is the final amount. This is the final amount to be paid. So this will not match with our textbook answer because they have done the average due date round off. We have done the average due date round up. So 1 day different is there. So because of that 1 day, the amount will go for a change. In the previous question, in the same ICA study material, they have done round up. If you do the average due date, if you see, they have done the round up. So in many places, they have done the round up. In very few places, they have done the round off. So we'll go with the majority. Correct. So if you want to round off this also, you can do round off for this. Nothing hard and fast. But in textbook, since you have not done round off or round up, so we are following the same rule. Are you able to follow? So 8380. Therefore, the net amount, therefore the net amount to be paid by X, sorry, by Y to X, by Y to X is this. You have to end the answer with a neat conclusion. Therefore, the net amount to be paid by Y to X is 8,380.77 paise. Any problem in this? Abhi, Bhumika, Kavi, are you comfortable?
Yes, sir. Yes, sir.
Kavya, Rishabh,
Yes, sir.
Rupesh, Sanjay, Shrikant, comfortable?
Yes, sir.
Okay. Now they're telling that what will happen? What will happen if the payment is made on 14th of July? What will happen if the payment is made on 14th of July? I'm just erasing this part. I can do it here. Case B. This is case B. If the payment is made on 14th of July, on 14th July, it amounts to, can I say late payment? It amounts to late payment. Why? Because guys, your due date on which the payment is supposed to happen is 21st of May. On this date, you're supposed to make the payment, but you're making the payment on 14th of July. So can I say you've paid late? Right? Therefore, Y is supposed to pay interest for delayed payment. For delayed payment. Is this clear or not clear? You have to write 100%. This diagram is not required. So this is, guys, the average due date. This is the average due date. And this is the payment date. Payment date. Actual payment date. What is average due date? 21, or you can say 21st of May. The actual payment date is 14th of July. So this is May, June, and July. So here, how many days you're delaying in May? You're supposed to make payment on 21st. So forget 21st. So 22 onwards. So May has got totally how many days? 31 days. In that 21 days gone. So 10 days of May. Plus this is May, this is June, this is July. June how many days? 30 days. And July? 14. Because you're not going till, see, this is the date, 14th of July. So forget this. Or for more convenience purpose, I can do a change here. Okay, this is May, June, July. In May, June, July, what is the due date? Average due date is 21st May. This is 1st of May. This is 1st of May. And this is 31st of July. And payment date, the actual payment date is 14th of July. So now I want to calculate interest from this period to this period. So how do I get this period? From 31 days, if I minus 21 days, from total 31 days, if I minus this 21 days, I'll get the balance 10 days. So that is this 10 days plus 30 days of July. Plus I need only first 14 days of, 30 days of June, and I need the first 14 days of July. So plus 14. Now are you able to follow? So 10 plus 30 plus 14 is how much? So there is a delayed, or I can say there is a delay in payment for 54 days. 54 days delay. 54 days delay. 30, 40, 50. 54 days delay. Now guys, therefore, interest is equal to, amount is how much? 8,500 into 8 by 100 into 54 divided by 365. So please tell me what is the interest amount? 100.6. 100.6 rupees. Now we need, guys, therefore the final amount to be paid by X to Y. Sorry, by Y to X. By Y to X. So original bill amount which Y has to pay to X, which is 8,500, plus interest amount which again Y has to pay to X because Y has done the delayed payment. So they have to suffer the interest, which is 100.6. So total amount is 8,600.60. 8,600.60. Okay, not okay? Online people, okay, not okay?
Yes,
Okay,
sir.
sir.
Everybody.
Yes, sir.
Okay, sir.
Online people, only very few people responded. Comfortable with this?
Yes, sir.
But offline people.
Yes, sir.
How about online people? No energy, man.
Comfortable, sir.
Here, sir.
Okay,
Yes.
very good.
Comfortable, sir.
Yes. Super. So fantastic, guys. So we have two more questions left under case A. Two more questions left under case A. So that will continue with the next class. Right? So yes, people, that's all from mine for today's session. I'll see you all in the next class. Until then, bye-bye. See you. Take care.
Thank you,
Thank
sir.
you, sir.